The insurers have taken a bit of a hit over the last few weeks during reporting season. Suncorp, QBE and now IAG have all fallen after poor results. We warned about Suncorp before it reported. Based on the way it was trading, to us it looked quite vulnerable. We did the same with QBE. We put a note out on the 15th of August, just before it reported, warning that it could fall towards 1080. And we did have an update in our blog last week where on a short video I just described how we arrived at that conclusion with QBE. So I thought I'd do the same with IAG. So as you can see here, we put a report out back on the 15th of August, just warning that price action for IAG looked quite negative. And with it reporting today and dropping about 10%, thought it was a timely reminder to go back, have a look at the chart, and I'm happy to share with you what we saw on the chart that told us to stay away, and hopefully you can learn from that. Not all stocks which tumble give you warning signs, but sometimes they do, like in this case, and it does make a bit of a difference if we can identify those warning signs for next time. So moving over to the chart for IAG. So this is a weekly candlestick chart. We'll just zoom in a little bit more here. So this covers the last year and a bit. So we can see that it's been trending up quite nicely throughout the year, but then we started to get some warning signs several weeks ago. So the first thing is the stock rallied up, and then at one point here, for those not familiar with candlesticks, this red candle means that the stock opened around this level, and then by the end of the week it closed all the way down here. So a fairly negative week compared to the prior weeks. So that's a negative, not enough to get too concerned about IAG. But what I guess tipped us into saying, look, just be careful with this stock, is how it traded after this particular week. And in this case, we're looking at these candles here. So the vertical lines, the shadows, they indicate the extremities of the trading range. So in this case, the share price, the shares opened up around 660. By the end of the week, they closed just a little bit over 660, but we can see that they almost got to 680 before getting sold back down. The next week, a similar instance where it tried to go up near 680, was sold back down. Once again, a little bit over 680, sold back down. And we can see even last week it suffered a bit of price rejection towards the end of the week there. Now, what's important to note is not just the fact that we've got about 3 or 4 weeks of price rejection, but the fact that this price rejection generally stayed in the bottom half of this very negative candle. So I'll just circle the candle. So I've just circled the negative candle, and we can see the price rejection occurring in the bottom half. So if IAG was looking positive, you'd expect that price would be able to test the upper limits as well. But the fact that it couldn't even get beyond halfway, and I'll just get a horizontal line to demonstrate that. So the horizontal line demonstrates around the halfway point of this candle. And we can see that for a number of weeks, the price of IAG was confined in the lower half of that negative candle. So that just adds to the negative feeling around IAG. It just continues to, I guess it just further proves that that price is definitely struggling. The bulls are not really in control at all when it comes to IAG. So that was the warning sign which was telling us the market doesn't like it. And of course, it reported poorly today, and it was easy for it to be sold down. Now we arrived at an initial target of just under $6, so that was quite simply just, if we get the, I'll just have to zoom out for this particular trend line. So if we just hook up the last few lows there, it's a little bit subjective, of course, but it generally leads us towards levels just under $6. So unfortunately, if you're in IAG, you should expect lower levels, but hopefully from what I've just shown you in terms of a weekly candlestick chart, if you see this sort of setup happen again, then you know that that's a dangerous sign and it's perhaps time to be out of the stock.